All right, welcome to this explainer. Today, we're diving straight into a really fascinating question. Can a century-old industrial giant successfully transform itself into a modern green energy powerhouse? We're looking at Tata Power, and honestly, it's a brilliant case study of an established utility company literally trying to rewrite its own DNA in real time. You know, it's the ultimate million-dollar question for retail investors and institutions alike. Can a company built on a legacy of coal and heavy thermal infrastructure pivot fast enough to actually command the valuation of a forward-looking clean energy stock? The market is actively trying to figure this giant puzzle out. Are they pricing in the company's gritty past or its highly ambitious future? Think about a vibrant, almost cinematic vision of the future. And this isn't just conceptual either. Tata Power is rapidly expanding its clean and green energy portfolio to a staggering 17.5 gigawatts. That's completely changing the face of the company. I mean, over the last 5 years alone, they've poured roughly 33,000 crore rupees into these clean energy solutions. To put that into perspective, that is 62% of their overall capex. So to figure out the true value here, we're going to break this explainer into 4 quick parts. 1. The Tata Power story. 2. The green energy transition. 3. Analyzing the stock price. And finally 4. Buy, sell, or hold.
Okay, let's kick things off with Section 1, the Tata Power story, a century of evolution.
The sheer timeline of this company brilliantly illustrates their resilience. I mean, they were incorporated way back in 1919. They basically built an empire. You've got their first small foray into wind with just a 17-megawatt asset back in 2001. Then, right after that, they leaned heavily into thermal energy with Indonesian coal acquisitions in 2003. But fast forward to targets for 2026, and they're projected to break national records by achieving 1.6 gigawatt peak in rooftop solar alone. It's just a wild journey of industrial evolution. And you know what's really interesting? The current reality of their operations today. Out of a massive 16.7 gigawatts of operational capacity, 47% is already running on clean and green sources. We're talking hydro, wind, solar, and waste heat recovery. So they aren't just blowing smoke about a green transition. Almost half of their massive engine is already running on it right now. We are quite literally watching a massive structural shift happen in real time. They are moving aggressively away from heavy, gritty thermal assets and shifting toward agile, modern wind and solar technologies. In fact, Tata Power has flat out stated that 100% of their future capacity additions will come from clean and green sources, definitively cutting off their exposure to coal going forward. Moving right along to Section 2, the green energy transition. Future growth catalysts. So Tata Power is targeting a really bold net zero goal by 2045, and it's backed by an incredibly exciting pipeline. Just look at the scale of these mega projects. A 1,000-megawatt pumped hydro storage project in Beevpuri scheduled for 2029. A massive 600-megawatt hydro project in Bhutan targeted for 2030. And get this, they're even making a foray into nuclear power with plans for 220-megawatt small modular nuclear units. I mean, that is exactly how you build 24/7 dispatchable clean power at an industrial scale. But hey, the story doesn't end at some distant power plant. They're aggressively scaling their consumer business too. We're talking about extensive EV charging networks, energy as a service, and a massive push to hit 1 crore households through the PM Surya Ghar solar scheme. They are literally positioning themselves right in the driveway and on the roof of the everyday consumer. Which brings us to Section 3, analyzing the stock price, pricing the transition. Trading around the 381 rupee mark recently, the company has pulled back a little bit from its 52-week highs. But make no mistake, it still commands a colossal market capitalization of over 1.2 trillion rupees. So the stakes at this valuation, absolutely huge. Here is where things get a bit tricky, trying to reconcile the fundamentals with the technicals. According to trendline data, if we look at the fundamental price tag, Tata Power is fairly valued right now at a current PE of 32.5. But if you project out their 1-year forward earnings per share to a target of 501.3, they actually look undervalued. Then again, if you check the short-term technicals, momentum indicators like the MACD are flashing a strongly bearish signal at negative 8.7, while the RSI is just sitting completely neutral at 40.3. It creates this fascinating tug-of-war for investors. You have a stock that has spent nearly 89% of the last year trading below its current standalone PE. So basically, you've got technical indicators signaling short-term weakness, battling against a company that is rapidly accelerating a 1.25 trillion rupee green energy capex pipeline. And that leads us perfectly into Section 4,
Buy, sell, or hold. Analyst verdicts.
Now, just to remain completely impartial here, we're laying out the whole spectrum of forecasts. You've got Motilal Oswal setting a target of 455 with a buy rating, Way to Wealth is at 380 with a hold, and then Moneymint is projecting way out to 2030 with a 900 to 1500 rupee target and a long-term buy rating. It's a pretty divided room.
On the very bullish side of things, firms like Motilal Oswal see a totally clear runway. They point to the aggressive 100% clean energy capacity addition, robust execution, and strong renewable earnings potential as the key drivers for that 455 rupee target. They see an upside of over 20% right now and maintain a very strong buy rating.
But on the flip side, you've got some caution coming from Way to Wealth. They absolutely acknowledge that the renewable segment is a massive catalyst, and they respect the diversified portfolio. However, they argue that trading at roughly 2.5 times the estimated FY28 price to book is quite a rich valuation for a utility company, no matter how green it's getting, and that prompts them to maintain a strict hold rating.
Ultimately, a lot of this comes down to the vision at the top. As Chairman Enchen Saikaran says, and I love this quote, "The future will favor organizations that combine scale with agility, innovation with execution, and purpose with performance." And they're walking the walk, too. They've reduced their net debt to underlying EBITDA from 6.1x down to 3.3x over the last decade, proving they can actually execute financial discipline while chasing all this innovation.
So as we wrap up this explainer, here's the question you have to ask yourself. Does this century-old industrial giant have what it takes to not just survive the messy, capital-intensive transition to green energy, but to entirely dominate it? And maybe more importantly, is the market right to price that dominance in today? Keep a very close eye on their execution of those mega projects, because for sure, that is going to be the ultimate deciding factor.